Hello, my people. It's my hope that you are well and the Lord has kept you safe. Welcome aboard to this space. If you happened to check my videos last week, I think the class was full of stories to do with Treasury Bonds, which is one of the government securities. And now I want us to discuss something really closely related to that. That is the Treasury Bills, so that we can be able to get the difference of the two, the difference between the two before we get to forget what we talked about the other week. So without wasting time, we get to our discussion. And interestingly, we don't have a lot of things to discuss when it comes to treasury bills. You can see when we were discussing treasury bonds, we have a whole list of, I think, 11 things or so. But today we have only around 7. So it means that we don't have a lot to discuss as we did with the treasury bonds. And that explains maybe this is a short-term investment, and maybe there is not much to discuss, but let's see. We hope it will be more easier to understand than the treasury bonds. Now, we start by point number 1 as usual. And the first step is understanding, getting to understand what we are talking about before we even go to how it is an investment. And the definition of treasury bills closely, or it's the same as the treasury bonds. We said that to start with, it is one of the two investment avenues under the umbrella of government securities. Government securities. Last week we discussed the main one, that is the treasury bonds, and now we have the treasury bills. These are two brothers that we have here, and the main difference is that this brother is shorter than this. I repeat, these are two brothers in one family, but the major difference is that this brother we are calling treasury bills is shorter than treasury bonds. So the main difference between the two, it's all about maturity or time to maturity. Time to maturity. So the definition of treasury bills then goes to be the same with that of the treasury bonds, where we said this is a loan. And we said in a loan we must have two parties. We must have the borrower, and we must have the lender. So in this case, who is borrowing? We said it is the Kenyan government. Who is lending? The Kenyans. What do governments start to gain in this association? So the government gets funds to finance its projects. And what do Kenyans get in return? They get interest from loans. That is the exact definition that we gave for treasury bonds. It is a loan advanced by the members of the public to the Kenyan government. The government benefits from getting funds to finance its projects, and Kenyans benefit from interest that they are paid from those loans. So that is the return that Kenyans get, or the investor gets, interest from loans. But if the definition is the same, then where then is the difference between the Treasury bonds and the Treasury bills. We said that for Treasury bonds, for the bonds, the maturity has to be greater than 1 year. So you are lending to the government for a period not less than 1 year. That's making it a long-term investment. But now, when it comes to the bills, it is an investment of less than 1 year. So, for bonds, you lend to the government for a period not less than 1 year. For bills, you lend to the government for a period not more than 1 year. So the difference between the Treasury bonds and the Treasury bills is all about time. Bonds is greater than 1 year, bills is 1 year or less. So that is the main difference between the two. So basically both are loans, they operate the same way. The main difference is the duration that is involved. So I hope you are clear with the definition. And therefore we get to the point number 2, where now we get to understand this major difference that we are talking about, which is time to maturity. So, time to maturity. So, time to maturity. It is very direct that we have bills with 3 categories of maturities. You see, for the bonds, each bond has its own time to maturity. A bond might be 2 years, might be 3 years, might be 50 years. But when it comes to bills, the case is different. We have only 3 categories of Treasury bills. That is grouping in terms of time to maturity. In category 1, we have the 91 days. Ama ukipenda 3 months. Number 2, we have the 182 days. And ukipenda, this is 6 months. And number 3, we have 364 days. Ukipenda, that is 1 year. Tosha. So we only have Treasury bills with these 3 different categories. 91 days, 182 days, 364 days. So you might be wanting to invest in government securities, but you are not willing to offer your money to the government for 10 years in a bond. Then it means in the bills, you have the opportunity to lend to the government and enjoy the interest from this type of investments for a period of 91 years, 182 days, 364 days. I hope it's clear. So when it comes to time to maturity of Treasury bills, we only have the 3. And I hope that is clear. Now, let's move on. I think this is quite simple as compared to the Treasury bonds. We don't need to have a lot of explanations. Number 3, we go to the minimum amount. Now, how much do you need to get started to investing in government securities? In bonds, we say that it is 50,000, and any additional amount should be a multiple of 50,000. And the case is not different here. It is the same. So the minimum amount should be Kenya shillings 50,000, and any additional amount has to be a multiple of 50,000. So it means it's either 50,000, 100,000, 150, 200, all the way. So it is 50,000 or a multiple of 50,000. We are done with that point. It's very simple. We are just mentioning a few things that are very crucial and moving on. But there is nothing complicated to discuss in Treasury bills. Now we go to the interest rates. Interest rates. Now, this might be the most important factor that we get to consider, because this is what determines how much return we get from our investments. And interest rates in Treasury bills are released every Thursday by the Central Bank of Kenya. Though I will explain the same at the investment process, let me mention that these three Treasury bills with those different maturities are floated every week. That is, they are floated every Friday, and the bidding is done up to Wednesday. Then on Thursday, that is when the results are released. So at the release of the results, that is where the interest rate that will be used are declared. Like for the last week, let's use a very practical example that we can connect with. I want us to use the rates for last week. And it is important to note that the rates are different for the three maturity periods, despite being the same week. So, now last week, for 91 days, and 364 days, for the 91 days, we had 9.5935%. Of course, that is per annum. For this, we had 10.0253% per annum, and for this, we had 11.3342% per annum. So those are the different rates that we had. And if you have been following the Treasury bills market over the last, I think, 3 months, around 3 months, this interest rate has been on a downward trajectory. I think around last year, around October, September, the interest rates were as high as 16%, but we have gone down all the way to a single digit. So it was not so fine for the economy with the Treasury bills offering a 16%, but for investors that was just okay, because the higher the interest, the lower the higher the return. But right now, we are hoping that it is we are hoping that it is a result of the economy stabilizing, that we are having a single digit in government securities, because ideally in a proper economy or in a normal economy, the interest rates of government securities should range around here. They should be a single digit, because that is a risk-free rate, because they are the investment that should be offering the lowest interest rates, so that the higher interest rates you get in other investments comes as a premium for the risk that you are taking. But last year things were quite abnormal, that government securities were offering 15%. Then you get other investments like the money market fund were giving things to do with 13%, which is not quite normal. So, but this is the rate at which we are operating right now, somewhere between 9% to 11%, depending on the time to maturity. And now we go to our next point, that is taxation. Number 4, taxation. We said that if you get to dive down and look at almost all the investments that we have, any interest you earn on this land, any interest that you earn from your investment, it is subject to what we call withholding tax. And treasury bills are no exceptions. They are subject to withholding tax, currently standing at 15%. And what it means is that if you get to invest in treasury bills, the interest that you earn is subject to a 15% withholding tax. And you know that tax for such investment is not negotiable. So you have to pay the 15% withholding tax. So by the time you decide to get into the treasury bills investments, be aware that 15% of the interest that you get to earn, you will have to leave it for the government. We go to the next point. I think this is where we might spend some few more minutes, so that we get to understand. And that is the interest rate calculations. Interest rates calculation. How do I start this so that can be well understood? Now, we have seen the interest rates that we get, and in the treasury bonds we said you invest, then wait for the interest to come, and which we said it is done in 2 installments per year. So you get to invest and wait for the interest to come. But the case is different here for the treasury bills, and this makes another major difference between the treasury bonds and the treasury bills. Other than the time, this is the other major difference between the treasury bonds and the treasury bills. And the difference is, in treasury bills, interest is paid upfront. I hope it's clear. Interest is paid upfront. So for bills, we say that interest is paid upfront. What do I mean? Let's say I invest 100,000. I'm investing 100,000. Let's just take a rate. This is just an example. We'll do some practical example using last week's rates. But this is just a simple illustration. Let's say I invest Kenya shillings 100,000 at a rate of 10%. Let's not factor in the tax, so that we don't get things complicated at this point of explaining what we mean by upfront. So what is 10% of this is 10%. So what is 10% of 100,000? So 10% of 100,000 is 10,000. So my interest is 10,000. Let's say it is a 364 days treasury bill. So it means that if I invest 100,000, the interest that I earn in the 364 days is 10,000. But I will not invest 100,000. So majority of the investment that we are aware of, it would mean that I give 100,000 to the Central Bank of Kenya. Then after 364 days, I will be given 110,000. That is the 100,000 that I invested plus the interest. This is not the case for the treasury bills. Now, for the treasury bills, when we say that interest is paid up front, I want to invest 100,000 and get an interest of 10,000 after the 364 days. What you do is that, to delete it is to confuse. So when it comes to treasury bills, what you do is that your interest is 10,000 from the 100,000 for 364 days. What you will do today is that you will send 90,000 to the Central Bank of Kenya. Then, after 364 days, now you get back 100,000. I hope it makes sense saying that interest is paid upfront. Like you had 100,000 that you wanted to invest and even place a bid for 100,000, but the interest from that 100 is 10,000. So the 10,000 is the interest. So instead of waiting after 1 year you get 10,000, what you do is set them 90,000 now, and you get 100,000 after the 1 year. So I hope you get the concept that interest rate for treasury bills is paid upfront. You tell them the amount you want to invest, they calculate the interest you are supposed to earn, then you will send the amount you wanted to invest less that interest rate, meaning that you are left with your interest. You have already earned your interest. So that is what it means by saying that interest is paid upfront. Now, in this step of interest calculations, I want us to do some practical calculations so that you see it is the figures that will help you make a decision, so that you see what you start to gain by investing in treasury bills, so that you decide whether it is worth or for you it is not worth. So I will not just mention things and you are left thinking, what kind of figures do I expect if I decide to go into this kind of investment? And remember, I say that these passive investment avenues are just there to, at least to make your money not to be subject to inflation. But it's not that it is a get rich quick scheme. So let's see what the figures have. And as usual, as you saw on the treasury bonds, I will always use an investment of 100,000, which is a reasonable amount to start with, and it's also easier for calculations. We said that from last week results, for the 91 days, the interest rate was 9.5935. For the 182 days, the interest rate was 10.0253, and for the 364 days, the interest rate was 11.3342%. All these are per annum interest rates. So I want us to use those three treasury bills as our examples as we do our calculations. So and for here, get ready to do some maths. And if you are not keen, I promise you that you'll be left somewhere in between. But I will try my best to ensure that I do it in a way that everyone understands. So I want us to start with an individual who decided to invest 100,000 in the 91 days treasury bills. So our case number 1 is the 91 days treasury bills. The guy is investing 100,000. Now, let's calculate the interest. We know that we already have the interest rates to be, the interest rate is 9.5935%. We know that we go back now to those days maths classes, and we said that interest is a product of the principal amount times the rate times time. Now, we have the principal amount, that is what? That is 100,000. We have the rate, that is 9.5935, and we have the time, which is 3 months, but we convert that one into years. So it is 3/12. So the interest, our interest rate comes to 100 multiplied by 9.5935 times 3/12. Now, let's do this using a calculator. This is a calculator that I really trust. It is a calculator that I have used all through my studies. I think right from around up form 2, form 3. So 9.5935. So this is a percentage, so it should be over 100. So I'm getting a figure of around 2398.375. I hope that I'm right with my figure there. So that is the figure. So this is the interest rate that you are entitled to after 3 months. But remember we said that interest from treasury bills is subject to withholding tax. So this 2,300 that you are supposed to receive in 3 months' time, it is subject to withholding tax. So what is 15% of this amount here? So 15% of this guy here, it is 359 shillings. $7,625. So it is from your interest rate that you less this amount. So how much are you supposed now to earn as interest from the 100,000 in 3 months? So that comes to we get the net interest. This was gross interest. Gross interest. Now this is the tax that is you will have to pay. Now let's get the net interest to be. The net interest will be, that is the 2398.375. You less 359.75625. So our net interest comes to 2398.375 minus answer. So it comes to 2038.61875. So the net interest that you will earn from the 100,000 at a rate of 9.593% for 3 months is 2,038 shillings. But we said interest rate on treasury bills is paid it's paid upfront. So you will not send 100,000 to CBK now ati wakurudishie ikiwa 102,038. Hapana. What you do is you take the 100,000, you less that interest that you are supposed to receive after 3 months. So that comes to 100 minus the interest that you are subject to. So the amount that you'll be instructed to send to CBK today will be 97,961.3825. So that after 3 months you get back 100,000. That is the element of interest being paid upfront. And I hope so. If you invested 100,000 in last week's treasury bills, you can confirm whether the figures that the amount that you have been requested to send to CBK by Monday 2 p.m. is around 97,961. In case there's anyone who is watching this and invested 100,000 for 3 months in last week's, today we are on 12th, so I mean in this last week that Maisha, the amount that you have been requested to send to CBK is around 97,961. So I hope you have been able to understand the process of interest calculations. Then if that is well, let's go to the other data. Now we take the example. I want us to do the 3 examples so that everyone can understand. Even if you did not understand with the example of the 91 days, now we are doing the 182 days, and maybe this is where you'll be able to grab the concept. So just wait and you see if something was not clear in the first part, just be keen. Maybe this is where the whatever that was not clear will be keen. So our second example is the 182 days treasury bills. The interest rate was 10.0253%. Now we said that interest is a product of principal times rate times time, and we have everything here. So our interest will be, the principal is 100,000. That is what we are using. The rate is 10.0253%, and the time is now the 182 days. Now it it is 6 months. So this is 6 over 12. So what does this give us? So 100,000 times 10, just times 0.1000253 times my calculator gives me a figure of Kenya shillings 5012.65. So that is the gross, this is the gross interest. So in 6 months, if you invest 100,000, you are entitled to an interest of 5,000 in 12 shillings. But this is the gross interest. We have to subject it to withholding tax of 15%. So what we do is that we take 15% of this, and that comes to 751 shillings, 751.8975, and so our net interest, which is given by the gross interest minus the withholding tax, we take it to be 5012.65 minus the answer. It comes to 4260.7525. So this is the interest that you are entitled to after 6 months. If you get to invest 100,000 in Treasury bills at a rate of 10.0253. But we said that interest on Treasury bills is paid upfront. So you will not set 100,000 to CBK now. At sasa do after 6 months, wakutumia 104 to 60.7525. No, this is not right. But this is what majority of the interest of the investments look like. But for the Treasury bills, it is different. So what you do, today you will send the Central Bank of Kenya 95,739.2475, so that after 6 months you get back 100,000. I hope it is clear. So interest on Treasury bills is paid upfront. So if you invest 100,000, if you want to invest 100,000 at a rate of 10.0253 for 6 months, what you do today is that you send the government of Kenya through the Central Bank of Kenya 95,739, so that you can get back 100,000 in 6 months' time. Reason being, interest on Treasury bills is paid upfront. I hope that's clear. Now, we go to the third example. So our third example is the last category of Treasury bills. That is the 364 days. Now, we still use the example of 100,000 at a rate of 11.3342%. So as usual, interest is a product of principal times rate times time. But our time here is 1 year and the interest is per year. So basically our time interest is 1, so we don't have to include it. So our interest will be 100,000 times 11.3342 all over 100. So can use so this comes to 11,334.2. So if you invest 100,000 in treasury bills for 1 year at a rate of 11.3342, this will be your gross interest. But remember that it is subject to a 15% withholding tax. So what is 15% of this gross? We find it to be 1,700. 0.13, I hope I'm not wrong. So our net interest will be 11,334.2 minus the withholding tax, and that's bring us to a figure of 9634.07. So that is our net interest. And so if you invest 100,000 in 364 days treasury bill, paying an interest of 11.3342, you'll be entitled to a net interest of 9,634. But we said that interest on treasury bills is paid in advance. So what gets to happen is that instead you will not send 100,000 to CBK right now. Then after 1 year, wakupee 109,634.07. No, this is not the case in treasury bills. So what you do in treasury bills, you send the Central Bank of Kenya 90,365.93, so that after 1 year you get to 100. You get you get 100,000 back. So that is what we mean when we say that interest is paid upfront. So I hope I was quite clear in terms of interest calculation when it comes to treasury bills. That is how interests are calculated. And you see, the margins are not so big as expected, because these are low risk, low investments. No, this is a low risk, low returns. So the interest is not that high, so the returns are not that high. But there is someone who had 100,000 in the account this January as we started, and that money will lie idle in that account for 1 year, simply because they cannot invest in treasury bills because they don't have good interest. Like, they prefer 0 interest instead of 11%. So they prefer their 100,000 earning. They prefer their 100,000 earning 0 shillings in 1 year, other than their 100,000 earning 9,634 shillings in 1 year. So as far as you are not in business that is giving you higher returns, and you have some idle money, regardless of how small the interest is, just dive in. Instead of earning 0 shillings from your 100,000 in 1 year, you will have a 9,600 at the end of the year. So I think I'm done with the interest calculation process, and we go to the final part. You see that treasury bills are not complicated as the bonds. So we can get to conclude. Now, I want to briefly talk about the investment process when it comes to treasury bills. Now, this process, I will assume that this is someone who has already taken interest in investment in government securities. So they have downloaded the Dow CSD app, or they have started the Dow CSD portal, and they have already created a CSD account. So their CSD account is ready. So after having your CSD account, what do you do if you want to invest in treasury bills? It is good to note that you have an opportunity to invest in treasury bills every week. These are not like treasury bonds that we are not sure on when the next treasury bond will be released. So though we have seen a trend of having a reopened bond every month, we are not sure of that. But when it comes to treasury bills, you are sure that you have an opportunity to invest in a treasury bill every week. So this is the procedure that gets to happen each and every other week. So on every Friday of the week, on every Friday, 3 treasury bills are floated. 3 bills are floated. And when I say 3 bills, I mean the 91 days, the 182 days, and of course the 364 days. So you have an opportunity to invest in an investment with any of the 3 time to maturities. So then from Friday, let's say from Friday to Wednesday, let's put it to Wednesday. This is where bidding goes on. This is where the bidding goes on. And bidding is very simple. Bidding is something that takes you less than 2 minutes when you get to the Dow CSD portal. You only have to fill one thing, just a single thing. You only have to click on the bill that you're interested in, that is the 91 days, the 182 days, or the 364 days. Then you just key in the amount that you wish to invest. And you remember that you said that the amount should be at least 50,000, and any additional amount to be a multiple of 50,000. So bidding goes on between Friday and Wednesday. So you have a lot of time to think and decide, and you choose. Now, then on Thursday, and maybe don't get confused. I have said about Thursday, bills being floated. Then I said between Thursday to Wednesday, I'm not going back. Not that I'm going front. So we are talking about now the following week. That is Friday, Saturday, Sunday, Monday, Tuesday, Wednesday. You know, unajua unaweza shangaa zinaje kuwa floated Friday, then zinaanza kubidiwa Friday to Wednesday. So it is the Friday of the week going forward. So when I say Thursday, I'm now talking about the Thursday of the following week. So results are released. So here, results are released. So at the release of the results, this is where you are told whether your bid was successful or not. And it is good to note that there are 2 types of bids. Let me mention that here. We have the competitive and the non-competitive. So in the competitive bid is where you quote the amount and your desired interest rate. For the non-competitive, it's where you just quote the amount and tell the Central Bank of Kenya that you are willing to take the interest that will be decided by the market forces. And it is good to note that for you to participate in the competitive bond, the competitive bid, you must be investing more than 2 million. So if you are investing less than 2 million, you have to go for the non-competitive bid. You just tell them the amount and let the interest to be decided by the market forces. So, and it is good to note that the policy of these avenues of investment investment is that all non-competitive bids, not bonds, all non-competitive bids has to be accepted. So if you place an uncompetitive bid, you can be sure that your bid will always be accepted. Now, the results are released on a Thursday. This is where we get to get the interest rates, and it comes in a tabular form. You will see my videos once in a while trying to interpret the results, where you get the interest rates, the amount that the government wanted to borrow, and the amount Kenyans were willing to offer. Then after the results, now on Friday, between Friday and Saturday, there is something that was introduced by the CBK a few months ago that we call the payment key. So this is a code inakaa ile ya M-Pesa. It looks like hiyo number ya M-Pesa. The way it has a combination of alphabets and numericals. Inakaa kitu kama hiyo. The payment key. That is the payment key that is directly connected to your bid. And it is what you use to send that is a reference number that you use to send the money from your commercial bank. Commercial bank where you operate an account to CBK. They must quote that payment key. So you cannot make, even if you receive a message saying that your bid is successful, or you can see the status on the CSG portal, you have to wait for the email and SMS giving you the payment key, because that is what you will need as a ref number to make the payment to CBK. And once you get the payment key on either Friday evening or Saturday, you have to make the payment now the following week by Monday 2 p.m. I hope it's clear. You have to send the payment, you have to make the payment, like that amount should have gotten to CBK by Monday 2 p.m. You see, we started by bills being floated on a Friday. We go the whole week, we go to Thursday, the results are released, the payment key are sent. Then on the other Monday, that is when you ought to have sent your money to CBK. So investment in Treasury Bills is that simple. I hope it's not complicated. It's not complicated. I find it quite simple compared to that of Treasury bonds. So that is the process. If you have any question or any clarification that you might seek about anything that we have discussed in this video, or something that I have not mentioned regarding Treasury Bills that you might want to get clarification about, so feel free to ask your question on the comment section, or if you need any kind of support when it comes to investment in the government securities, don't shy from asking for help. Otherwise, see you in the next video.